On April 2, 2025, President Donald Trump stepped into the Rose Garden and dropped a bombshell he called Liberation Day, with a 10% tariff on all imports, a 34% tariff on China, and a 20% tariff on the EU. He promised to free America from what he described as decades of economic exploitation. However, history whispers warning of chaos, from the Great Depression to Trump's own trade wars. So what's really happening here? Is Liberation Day the key to America's economic independence, or a reckless gamble that could ignite a global trade war? Let's find out. To get a grip on Liberation Day, we need to start with what Trump's aiming for. In his speech, he painted a picture of an America looted, pillaged, raped and plundered by foreign nations. His words, not mine. The solution, he says, is tariffs that will bring manufacturing back home, shrink the trade deficit and make the US a self-reliant economic powerhouse. It's a vision rooted in his first term, but this time the scale is massive. A 10% baseline tariff hits every country, while China faces an additional 34%, pushing some goods past 50% when you factor in existing duties, and the EU gets a 20% hike. That's not a small change, it's a seismic shift for a country that imported $3.5 trillion in goods last year. So, is this economic independence? Trump's team says that it is. They argue that high tariffs will force companies to ditch foreign factories and build in the US, creating jobs and cutting reliance on places like China. And they point to the trade deficit of $859 billion in 2024 as a proof that America has been bleeding wealth and tariffs are the tourniquet. So let's look at what history and numbers tell us about where this could go. A great example is one of the most infamous tariff experiments in American history, the Smoot-Hawley Tariff Act of 1930, which was signed into law by President Hoover. The idea was simple: raise tariffs on over 20,000 types of imported goods, with rates averaging around 40 to 50% on some items, and shield domestic industries from foreign competition. Instead, what followed was chaos. Within months, countries like Canada, Britain and France retaliated with their own tariffs on American goods. US exports, think wheat, cotton and machinery, plummeted by nearly 67% between 1929 and 1933. Global trade shrank, and many historians argue that this deepened the Great Depression, turning a bad recession into a catastrophe. Now, Trump's supporters have some seemingly valid arguments too, mostly hinging on the idea that the US economy in 2025 is fundamentally different from the 1930s and is better equipped to handle tariffs. So it is poised to reap significant benefits like job creation and corporate relocation. So let's unpack each piece of this and see if these arguments hold up to scrutiny. First, they point to the sheer size of the US economy, $28 trillion in GDP, as the proof of resilience. And it is true that the US is the world's largest economy, dwarfing its 1.5 trillion GDP back in 1930. A bigger economy can absorb shocks better, in theory. But while size does matter, alone it doesn't tell the whole story. In 1930, the US was still a creditor nation, lending more than it borrowed, with a relatively closed economy. Today, it's the world's largest debtor, with a national debt exceeding $35 trillion and a trade deficit of $859 billion in 2024. Tariffs might bring in revenue. For example, estimates suggest 200 to 300 billion annually from the 10% baseline. But that is maybe sizable, but still just a drop in the bucket compared to the $6 trillion federal budget. Meanwhile, higher import costs could strain an economy which is already grappling with rising inflation and interest rates, which were reported by the Federal Reserve in early 2025. Resilience isn't just about scale, it's about stability, and the US has vulnerabilities that it didn't used to have in 1930s. Next, Trump's camp argues that the US is less trade dependent, with exports at 11% of GDP versus 16% back in the 1920s. On the surface, this suggests that America can shrug off retaliation from trade partners, but this statistics misleads by focusing only on exports. There is also imports, and those are 15% of America's GDP today, which is way up from 4% in 1930. That is a massive shift. The modern US relies heavily on imported goods, from Chinese electronics to Canadian oil to German machinery. A 10% tariff across the board plus 34% on China and 20% on the EU doesn't just hit exports, it jacks up the cost of those imports, which feed into everything from consumer prices to industrial production. Simply said, it will cost quite a bit extra for every American household. There are various estimates out there, but they range between $2,000 and $5,000 annually. And that's not really pocket change for an average American family. Then there is the claim that America can take the hit. This assumes trading partners won't hit back hard, or that the US can outlast them. And if it was one or two big partners, that's one thing. But the US is going to trade war on too many fronts, against players with muscle of their own. Canada has already promised retaliation for Liberation Day, with $600 billion in annual trade at stake. The EU, with $700 billion in trade, is mulling tariffs on US tech and agriculture. And probably most importantly, China, which is now facing 54% tariffs. They will kick back where it hurts, like in semiconductor or aircraft industries or agriculture. The Peterson Institute warns that a full-scale retaliation could shrink US GDP by 0.5% to 1% by 2027. Hardly a hit that you can just shrug off. The 1930s showed that even a less connected world could spiral. Today's globalized supply chains amplify the risk. Then there is Trump's big promise that tariffs will force a reckoning. Companies will relocate to the US rather than pay up. It's a compelling vision, like factories sprouting in Ohio or Texas, free from foreign dependence. But the reality is a bit more complicated. Building a modern factory takes billions and years. 10 billion and 3 to 5 years for a semiconductor factory, for example. The 2025 tariffs might push firms to reshore, but not fast. Only 17% of North American companies fully reshored after the first trade war. Most shifted to Mexico or Southeast Asia, dodging both Chinese costs and the US regulations. Also, there is the cost of labor. China's labor is still 80% cheaper than America's, so tariffs would need to be astronomical and sustained to flip that math. Short term, firms might just eat up the cost or obviously pass them on to consumers and not just pack up and move. Finally, the White House's claims of 500,000 new manufacturing jobs by 2030 sounds too bold. The numbers don't add up that easily. Trump's 2018 tariffs created about 26,000 jobs in protected industries, but lost 75,000 elsewhere due to higher costs, which is a net negative. Now, if we scale that to Liberation Day's broader scope, you might get 100 to 200,000 jobs in targeted industries like autos or machinery, assuming no major disruptions. But retaliation and price hikes could erase those gains. And manufacturing is only 8% of US employment today, down from 30% in the 1950s. So even 500,000 jobs, optimistic as that is, won't reverse decades of automation and globalization. 500,000 jobs may sound like a lot, but it's barely 0.3% of the US workforce, which is around 170 million people. You see, the Trump supporters' case leans on the narrative of American strength and adaptability, but it glosses over the interconnectedness of the 2025's economy. A bigger GDP doesn't shield you from global blowback. Lower export reliance doesn't offset import dependence. And job creation hinges on corporate moves that tariffs alone can't guarantee. At least not in a world where trade partners fight back and supply chains bend but don't break. So, is it a trade war or independence? It depends on how it plays out. In the end of the day, Liberation Day is a high-stakes bet. Trump is pitching it as America's emancipation from a rigged global system, but it's unlikely that he is ready for a long-term trade war. He is probably going for his old and tested blitz strategy, hoping to assert US economic dominance and renegotiate global trade relationships on his terms. The tariffs are a stick to bring trading partners back to the table, much like the 2020 Phase 1 deal with China during his first term, which eased tensions after the initial escalation. He likely expects Canada and Mexico and the EU to blink first, offering concessions, say more US exports or factory investments, to dodge the 10 and 20% tariff rates. With China, it's a cudgel to punish what he calls unfair practices like intellectual property theft and currency manipulation. And again, it is a pathway to renegotiate trade deals that favor American workers and firms, reinforcing his narrative of putting America first. The problem is that Trump's quick win playbook is now familiar to his counterparts. So, if China doubles down, if Canada closes its borders to the US goods, if the EU unites against the US, then it's an all-in trade war. History shows that tariffs can protect, yes, but they can also provoke, and in a world this connected, no one wins in a war of attrition. And people who stand to lose the most are all of us, taxpayers across the world. And thank you very much for watching. Let me know in the comments below what you think. Can Trump really pull off an economic independence play? Or is he pushing the world into chaos? And if you found this content to be useful or thought-provoking, please consider leaving a like and subscribing for more. Thank you again, and I'll see you in the next one.